It's a little late, but better late than never. It's Sunday. It's about 8 o'clock, and I didn't have the opportunity quite to do basically an end of the month, which is basically what this is. A little late. Hope you guys had an enjoyable weekend. It was a bit busy for me. I had some classes that I had to take for the hospital, and then of course I had another class this morning, and I'm basically starting a new contract tomorrow at another hospital out in Brooklyn. I left the hospital that I was previously working at and decided I wanted something on the weekend. So like I had said before, that my goal for the year was to basically work on my own business. And so I left the hospital that I was at. I was working full time at one of the major hospitals here in New York. And back in 2017, I decided I wanted to, let me see, here we go, I can pull it up. I decided I wanted to start my own business. And then of course I started a little bit and didn't start till about in the middle of 18. And then 19, I was busy kind of seeing patients here and there, doing a lot of free work. And I got really comfortable. And then of course, with the Rona hit, which basically put the kibosh on doing private aid work, which is what I focused on. And so I was really busy in the hospital, just kind of focusing because we were always short all the time. And of course, when you're doing so much overtime, it makes for easy money. And then for 2021, I promised myself that I was going to focus more on my business. So I decided to quit. I was working well over six-figure salary. I was pulling in about 165, 170 for the year. And I decided that I mean, I was working a lot. Don't get me wrong. I was working my ass off. Um, but I really wasn't dedicating my time to my craft or my business that I wanted to focus on, which is private home healthcare. So I do, like I said, I do live in Manhattan, and so no matter where I go, um, I basically started this company way back where for individuals who are looking for basically for private healthcare, and I really wanted to devote more time to going out and finding clients. And so I was working so much at the hospital that I really didn't have the time to basically go out and do the legwork. Basically, so I was working on some flyers that I'm basically going to put around in the city for this month, for the month of April. I'm starting a new contract at a new hospital, but the thing was is I did not want to work anything but weekends. And so currently I found something that worked with my schedule. It still pays well. So I'm able to support myself on that end while focusing, of course, on my business. The other thing is that, of course, it gave me the time necessary, of course, during the week. So I only work Friday, Saturday, Sunday. So I don't even do a typical full schedule. And of course, it is a contract, so it's only good for 3 months, and then I'll move on from there. So between that and of course, I do the day trading, some swing trading, and then some dividend investing. And so that's how I'm able to currently support myself. And of course, I do have quite a bit of money. I've got about a year, a year and a half of savings that I don't necessarily have to touch, obviously anytime soon. Now, with that moving forward, that's basically what my purpose. I wanted something that would give me the free time during the week that I go out and see patients, so that when Friday rolls around, Friday, Saturday, Sunday, I can basically work at the hospital, keep my skills up, right? Because I wouldn't want to let go of my skills. Gives me a foot in the door always at a local hospital, but it gives me the flexibility and the freedom that I'm not tied down to anything. So in case I need to move, I can be like, you know what, the contract is only for X amount of time. And most importantly, it allows me not to get too comfortable with working that whole 9 to 5. Kind of when you get that guaranteed income, you kind of sleep on doing your own thing. And so that was my goal. I promised myself for 2021 that I would push harder for being independent, especially with an impending dollar collapse. Now, of course, we're seeing the president, the current sitting president, they're basically printing money hand over fist with they passed a 1.9 trillion, Rona stimulus, which we're not even going to get to. And then, of course, there's the infrastructure bill, which is going to be like another 2.5, which people like what's her name, AOC is calling for like 10 trillion. Of course, the government, whenever they allocate these type of funds, it's really never going to be set in stone that it's going to be this much, it's going to be this amount. They always overspend. And so what I'm looking typically for stocks that may benefit. Of course, from their perspective, it's more likely going to be EV. So you'll probably see companies more like Tesla and Neo. Maybe you might see ChargePoint, which I believe is CHPT. You might see these type of stocks move to the upside because the whole infrastructure is going to be EV. But we might see some moves in like steel and other metals. So I took a small position in stocks like Rio as well as X, right? So I think last time we talked about that one, we saw X come all the way up way above 27. I'm currently long at around 22 and change, I think like 22.19. I only took about $1,000. I'm looking for about 20 or 25%. We'll see if we get there. I'm currently up about 13%. I was up 17% when we hit 27s. We saw quite a bit of a sell-off. We might be retesting those 24s. As you can see, we basically double top those 24s, and we're looking like we're seeing a bit of a pullback. We'll have to see if the liquidity holds, because we'll see, because the stock move had quite a bit of a run, but we are seeing a bit of a breakout. As far as the news that is concerned, they said that steel will still be doing well. Companies, of course, like ExxonMobil, I'm still keeping an eye on. XOM, we're seeing XOM still holding above those 56s. We've seen quite a bit of move to the downside with a little bit of market volatility over the last month in March. April may be a bit smoother, and all the news that I have read still says that we're going to see movement in oil to the upside. I believe it was Goldman Sachs that said that they're looking for oil for about $80. I believe we hit 60 something, about 67 a barrel, but they're calling for at least 80. Obviously, once the country starts to get opened up, which I think will happen more during the summer months, where we'll see a little bit more openings. People will be driving. We're seeing, certain states that were a little bit more locked down are starting to open. Like, for example, here in New York, due to, of course, the coming passport, or the Excelsior. What is it called? The Excelsior passport. I forget what it's called. But we're going to see more businesses, of course, taking part in that. And so, of course, that's why I'm still holding on to my oil stocks, as well as to companies like Wells Fargo. Wells Fargo, I'm waiting for a breach again. Reiterating, waiting for a breach above 40. We're seeing it still trade between 38 and about $40. And so again, we closed fairly on the highs. Futures, I believe, are indicating. This is something else. Yeah, I was looking up something on Rio, but I believe futures are indicating up 200 for today so far. In terms of the end of the month, in terms of touching on the dividends, as you can see, we earned quite a bit of dividends. We have quite a few of them that we earned here. And so basically for the month of March, we earned just about $332 on my small account. So I don't have exactly a lot. I did pull some of my funds out. I sold certain stocks that I think we will see pullbacks. I'll have to wait and see if we're going to see a bit of a pullback in the market. We could see April typically is an up month. So we'll have to wait and see. There was quite a bit of volatility, but for the most part, I really didn't see a lot of movement in my account. So we'll see if the coming months actually offer some movement to the upside. Now, of course, in terms of the Dow, as you can see, we're looking at the Dow. You can see we're just about, again, beating against that looks like 33.2. Right, so we're beating up against that 33.2, and we're going to see if we're going to make some moves to the upside. In terms of the Nasdaq again coming up against this resistance. We'll have to wait and see if the U.S. 10-year yield, right? We're seeing the U.S. 10-year yield again. We more than likely we're going to see this yield reach 2. We'll have to wait and see how that is going to affect the Nasdaq. So for those of you who are interested in tech stocks, we could see the yield continue to trade higher, even though, of course, the market is basically Japan is dumping the 10-year yield, along with, for example, with China. There are talks between Russia and China about diminishing their use of the dollar. So it's something to keep your eye on. There was a recent article that I came across talking about that exact same thing, and I'm seeing it quite a few times over and over and over again, where different diplomats and both China and Russian representatives are getting together talking about utilizing the dollar less and less. And then, of course, you have places like Japan that are basically dumping the dollar, dumping the 10-year treasury, which is basically going to reduce the price, I should say, of the 10-year yield, which is going to 10-year treasury, and of course raise the yield. And of course, higher yields do not bode well for typically growth stocks like in the NASDAQ, which is why we might see a little bit of a pullback. The big resistance is going to be here at 2%, right? The big resistance, as you can see, is going to be right here where we fell off, right? Back in about, it fell off about August of 19, and then we basically are trading to the upside. And of course, we're trading still under the 200. So we'll have to wait and see how that's going to impact the market moving forward. And of course, with Joe Biden's stimulus plan, as long as they're basically printing money moving forward, the stock market, of course, will edge higher, of course, sector based, which is why, like I said before, I'm still heavily, I think I bought about 2,500 into Kroger on the pullback. Kroger stating that Kroger was going to start increasing their online business. They've done quite well with their online sales, and their forecast, of course, to trade higher. So I decided to take a small position. I believe I bought about 2,500 into that position. I might add another 2,500 with me going back into the hospital system, and of course I'll have a little bit more income moving forward. Did have a little bit of a financial snag. The previous hospital that I was at, they owed me money. They basically paid me out a huge bulk. And then I believe they said they emailed me because I saw that they retracted all the funds. And I'm like, what the hell just happened? You just pulled a whole bunch of funds out of my account without even saying anything to me. And they were like, oh, I think we overpaid you by like $200. And I'm like, you could have just contacted me instead of taking all of these funds out of my account, especially because had I not been paying attention and had I been moving money into my trading account, they basically would overdraft me. So that kind of sucked, especially because I had already moved funds into other things for my business. So I was like, basically cash poor. A lot of it is either in my business account or in my trading account. At least we'll get a little bit more liquidity into the account once I start working this week. I start tomorrow doing my training, and then of course I start back at working during the weekend. So that'll give me a little bit more liquidity, so I won't have to worry too much. I think if I was going to buy something, it would probably be Redfin. Redfin I've been watching persistently for a play at around $56, but it keeps bouncing off of 60s. Did have that one opportunity to buy it down here at about 58 and change, and then again we saw a bounce at about $60. That seems to be where the resistance is, even though this is where we kind of topped out both on this day and of course for several days here, and finally we traded to the upside right here. But of course we're not hitting that particular resistance just yet. We're basically hitting above it. So one of the stocks, of course, I'm keeping my eye on, of course, is companies like Redfin, Kroger. If I do see a little bit more of a pullback to about right here, there should be a little bit of resistance right about here. Should see a little bit of a resistance where it's traded multiple days. So I could see a little bit of a pullback to 34s, which would get me to allocate a little bit more. Again, a tiny bit of a dividend, not really anything to worry about. Again, I'm still in companies like KHC. KHC we saw again holding above 40 and actually hit 41s. And we're going to see traded way up to the upside. And I want to see if this is going to trade even higher again for the next week. Again, another food stock, of course, is Tyson. We saw Tyson hold those 74s, what looks like triple bottoming here, where we finally broke out here, and then of course a retest, came back here, another retest. So we'll see if Tyson is going to move above to the upside. The real resistance is right here at $78. So if the stock breaks above 78, we could see potential upside into the 90s, but we'll have to wait and see how that works with news. Like I said, I do believe that there is going to be more inflation to come in terms of food stocks, which is why, of course, I'm still holding stocks like General Mills, Kellogg's, KO, Coca-Cola, especially with more of the bars opening up here in New York, which is where I believe around 50% of the business from Coca-Cola comes from. And so with a lot of these bar closures, and of course with all of these bar closures, of course, it has impacted Coca-Cola's bottom line for the most part. So these will basically be the stocks that I'll be looking for this particular month. We'll see if we get a little bit of a push to the upside. We allocate some funds. Again, these food stocks and basically anything for infrastructure, probably things like steel. You might see like Home Depot or Caterpillar move to the upside. Really can't tell what's going to be impacted, again, because don't know how they're going to allocate the money for the infrastructure bill, if they're going to go into windmills or if they're going to go into EVs or if they're going to go into, charging stations. So you look for things like ChargePoint. Their goods is basically as good as mine. And so basically I'll be keeping my eye on food stocks, oil, basically anything that's inflation related, which would be commodities, right? So you'd have like your food stocks, commodities, steel, oil, minerals, and probably like anything related to EVs, like obviously Tesla, NEO, ChargePoint. But again, really not sure on that end with the infrastructure bill. We'll have to see how how the week looks moving forward. But these are things I'm going to be keeping my eye on. Again, keep your eye on that 10-year yield to see if we do break above. I believe the high was 1.77 the last time. So we did see a little bit of a pullback. And of course, if we do see a surge again to the upside with more treasury selling, that is going to, of course, cause the NASDAQ to sell off a little bit. But we'll just have to leave it there, and I'll check you out next time. Thanks for watching. Of course, feel free to like, comment, and subscribe. If you have anything further to add, I really do appreciate it. Let me know what you're looking to invest in, and I'll check you out next time. Thanks for watching.